So welcome to another live with Brent and Lee. If this is the first time you've been to my channel, my name is Lee Brickey. And here on this channel, we talk about everything real estate in Palm Beach County and the Treasure Coast. Tonight, we have a lot of content for you. We put together a lot of slides. We're going to talk to you tonight about this FTC just slapped Open Door with a $62 million fine. We're going to tell you a little bit about that. We're also going to let Brent tell you where mortgage rates are right now and where they may be heading because they're up and down on a daily basis. We're also going to talk to you about what new home builders are saying right now and their concerns with what's happening in the market. We're going to give you a market update on the Treasure Coast in Palm Beach County. And we're going to tell you why we believe that Florida is insulated from anything like a crash or even prices decreasing too much. And then also we're going to end it up by telling you what we believe buyers and sellers should be doing right now. If you're a buyer trying to buy in the market, should you buy or should you hold off? And if you're a seller and your home is sitting on the market, how you can make your home move and what's going on right now with the market. So don't go anywhere, stay with us, and we are going to get started right now. So welcome, Brent. How are you doing tonight, my brother?
Doing great. How are you, Lee?
I'm doing awesome.
Good.
So today we had a bunch of news hit the market on rates and what's going on. We're going to get right to that. But first, I want to let people know about what happened to Open Door, because Open Door is one of these companies that buys your home from you for supposedly what the market value is and more than you can sell it for. That's what they've been telling people. Zillow was doing it. We saw what happened there. So the FTC just stepped in and slapped Open Door with a big fine. And I'm going to share my screen here. And there it is. So the FTC just slapped Open Door with a $62 million fine for misleading customers about the true cost of its home buying business. Federal Trade Commission has hit home buyer and seller Open Door with a $62 million fine. The FTC said that Open Door misled sellers by telling them that they would make more by selling to Open Door than they would in the open market. The company, this is what I find funny, Brent. The company disputes the allegations, though it says it stopped using misleading marketing.
We didn't do anything wrong.
We'll stop using the marketing that's misleading you into believing that we did something, do anything wrong, though.
Right.
It's unbelievable, man.
It is, right?
So anyway, talking a little bit about this. There's no reason to sell your home to one of these companies unless you really need to get out of it right now. I mean, right. So let's say you're buying new construction and you haven't sold your home. You got to get out of it because you'll lose your deposit. That's one reason why you might want to use one of these companies. Or, you just don't want to deal with it and you're just willing to just dump your home off and you don't want to dump it to an investor. That's another reason maybe. Mm-hmm. But in most cases, the market's strong enough, especially here in Florida, that you can put your house on the market for market price and sell it pretty quickly. I mean, homes are still selling right now. We're in a little downturn with the summer months, but it's a little slow. But you can sell your home on your own. So I've had a lot of clients that have bought new construction and said, should we sell to Zillow or Open Door in the past? And I'm like, no, just list it with a good agent and sell it and get top dollar. So that's my thoughts on that. So moving along, let's talk a little bit about rates, Brent, and what we're seeing out here with the rates. So we're there's a lot of what is a recession? If there's a recession real, is two downturns, is that a recession? And granted, we're seeing some weird numbers, right? I mean, the stock market seems to be rallying right now. We've seen the job numbers come in. We're back to 3.6% unemployment nationwide, which is the lowest we've ever been at. So we're fully employed. with that being said, real income is lower right now, and we see all this money being spent still by the government, and they're trying to spend even more money, which is bad for recession. And people are still out there spending money. I mean, we see gas prices come down, which is a good thing, but I think that's tied to less travel. I saw on the news the other day that Target has reported their sales down 90%. So that's, we're rolling into a recession here. And if the Fed can't get their hands around this, we're going to see some stagflation. So, but with that being said, real estate's always been something to buy during a recession. Over history, you've been doing this business a lot, twice as long as, a little more than that, twice as long as I have, as far as the retail side goes. So talk a little to us about this recession and what it means with falling rates in a recession, and where you see rates going, because they just jumped back up, right?
Yeah, they did. And so it's been a yo-yo really for about the last 5 or 6 weeks. We'll have recession will take over the headline news 1 week, and then inflation will take over the other. And so basically, to keep inflation under control, they're going to start raising rates, right? That's what you do to, you kind of have to tamp down, demand, if you will. And so that's what we're seeing on days where, something comes out regarding inflation. We hear a recession, and just the opposite is true. So we're seeing, anything around employment figures less than what was expected. And it's always about what was estimated and what was expected. That's what moves rates daily. And so we'll see inter-day rates change a couple times these days. It's not unusual. And so really, we watch it in real time. So we lock our pipeline when it's, opportune times to do that. But yeah, it's really been up and down. The last couple of days, rates have popped back up. I think we were ending, in the 5.2 end of last week. And this week we're up to about 5.3. The bond, is starting to go down again, but it's still trading in a range where, rates should be in the mid fives, probably, as where most people would be, with a standard credit profile.
Right. And this is causing some issues with builders and getting a little afraid here. If you look at Toll Brothers says that home buyers sidelined by higher mortgage rates and market volatility. The company said that as the quarter progressed, it saw a significant decline in demand as it combined impact of sharply rising mortgage rates, higher home prices, stock market volatility, macroeconomics uncertainty caused by prospective buyers to step to the sidelines. It's a lot of words there. But anyways, there are signs, they say, of increased demand. This is the CEO of Toll Brothers. There are signs of increased demand in the past few weeks. However, Toll Brothers said as sentiment is improving and buyers are returning to the market. So we're seeing a little bit of that too. But
absolutely,
we are seeing our listing sitting right now.
I'll tell you what that is. A lot of Toll Brothers is a very large builder, and primarily a lot of luxury homes, that type of thing, but tract homes nonetheless. Right. And so they, when you're seeing mortgage rates swing, 3/8 to a half in 3 or 4 week period, I can tell people just on the front lines here, 70 to 80% of the people we work with really they say, how much can I afford? What will the underwriter approve? And so they typically lean towards, the maximum they can qualify for. So you have a lot of folks that are just, qualifying for that maximum amount. Rates go up, it's not locked, and now they no longer qualify for the home. So we see that a lot. And so if you're on the bubble, as far as qualifying, it's not a bad idea to lock out further just to ensure you're going to buy a home, don't lose your deposit. Right. Yeah. But I think that when you see, like you said, increased demand over the last couple of weeks, I think what that's directly related to, rates coming from 5.6, 5 down to 5.2 over, 3 or 4 week period there earlier this last month. So that's, it really really is what we see, on the front lines here. What people do and their behavior.
Right. And nationwide you're seeing this happen, but here we're seeing Mattamy Homes, Coulter, and Taylor Morrison,
Mm-hmm.
even Lennar and Ryan Homes, which I'm not a big fan of, Miranda Homes. I mean, they're not slowing down. I mean, Mattamy's for sure not slowing down. They're building this new community cadence, and they're going to, I've mentioned this before, they're going to spec out the whole community. So, I mean, for a builder to throw all that, and they're a private builder. They're not one of these public builders like Toll Brothers. So, they're using their own cash to build out these houses. So, when you see a big builder like that, it's the largest private builder in North America, going ahead and building these spec homes so they can sell them faster. They're expecting the market to continue to move forward.
Yeah, and a spec home, to define that for the audience, that's building a home without a current buyer.
Right.
So they're putting their own money out. They're believing that the market's going to be there when that home is finished. Yeah.
Exactly. So so on the rate side, if you look at this on the just messed up. Here we go. Right screen. All right, on the rate side, we're still historically low as far as inventory goes right now, and rates are still historically low.
Mm-hmm. Yeah.
I mean, we've seen inventory still as 2019. I mean, look where the inventory was compared to what it is right now, where it is in 2021, and now 22. We still have way more inventory, so we're still seeing a lot of inventory. We still have a lot less inventory than we did in 2019. We're going to talk more about that and show actually those statistics right from Florida right now. Statistics.
Mm-hmm.
I put that all together, but it's where rates are now. I mean, we're only about a point from where we were 10 year for over 10 years. I mean, we're in the like 4.6 to 4.8 for almost 10 years, right, Brent?
Right. Yeah. So that's been the range.
Yep. So let's look at this. So going through this is closed sales from January 2018 to October 2019. This is the top range here, right? So we're going from January to 2018 to October 2019. Okay, so we can't. So when you look at all these statistics people are looking at, and this is why I'm going to show this to everyone. When you look at all these statistics that people are showing right now, they're showing statistics from last year. And last year we had a real estate boom because of rates being so low. Real estate market took off, and everybody went out and bought houses, and it ran prices up, and inventory was just sucked off the market, and no one could keep up with it, right? So now we're moving more toward a balanced market, but I think as Americans we forget very quickly. We have short memories of things that happen.
Right.
2 years is like a lifetime here lately. So I want to show this screen because these are Florida closed sales, single family homes. And you can see where in 2018, there was about July of 2018, there was about, 25,000 homes sold all over the state of Florida. Right. And then in 2019 of October, we were sitting about the same. And you can see how the graph moves up and down for the season, right? So summer months, it got higher. Once we hit January, February, March, April, May, and then it starts to drop off in September and October. That's where we are. August, September, October is where we are now, right? So if we look at today, right? So January 2022, the market, those first 2 months, the market was slow like it is right now. And then all of a sudden it popped up in March. And then April, it was strong. May, it was strong. June, it was strong. And then July, you can see it took this dip, right? So June, we were sitting at these high rates.
Mm-hmm.
right, Brent? Where were
Right.
we in May?
Yeah. I mean, it was much higher. Yeah. Rates went up from January steadily through May.
Right, right.
Mm-hmm.
So now we're seeing things kind of dive off. But if we look at July, right?
Mm-hmm.
You can see where here it's actually a slower market, and then it starts to work its way down. But this was a very balanced market in 2019.
Mm-hmm.
So here we're seeing this dip in June and July. So I think it's a combination of everything that's going on right now. It's rates, it's uncertainty in the market, uh,
Mm-hmm.
right?
Yeah, absolutely. It's what we're seeing. We're seeing people like, well, what's going to happen, because they're hearing conflicting stories, are we in a recession? And so much of this is dependent upon, first of all, real estate's very local, right? I mean, between just counties, Lee, there's a different story in each county, St. Lucie County to Martin to Palm Beach to Broward and Miami-Dade. I mean, they have their own story and what the dynamics of all those markets, but each family has their own story. As we're entering a recession, how secure is your job? Those are personal decisions people have to make, too. And, as far as, if someone has a job that, their line of work is really not that secure in recessionary times, would you, that's something you want to consider. So if you're more steady, if you have a government job or a school teacher, something like that, it's not going anywhere, so so that all should enter into the decisions people are making right now.
Right. And those graphs I just showed were the entire state of Florida, where
Right.
this graph is just Port St. Lucie. And
Right.
I showed just Port St. Lucie because for us, this has been a super hot market for the last 10 years.
Mm-hmm.
It's come back strong since COVID, but it was moving. I keep telling people all the time, clients will ask me, where do you think the best place to buy investment real estate is? It's always been Port St. Lucie. It's always been a great place to buy investment real estate. So buying a home in Port St. Lucie, let's say you're an investor or you're a young couple, it's if you can drive back and forth from Port St. Lucie, if you're within an hour, it's worth every penny. It's worth every minute of your time to purchase in Port St. Lucie, because you're going to see the most equity there as we move into more of a balanced market that we are right now. I've said this before in videos that we were about 10% a year in Port St. Lucie when we were 3 to 5% in Palm Beach County.
Right.
And this was before COVID. So if this should bring some calmness to any thinking that we're heading for a market crash. I don't even see prices really dropping. They might flatten out a little bit in some places, some different areas, maybe 3-story townhomes, which were, here in Jupiter, Palm Beach Gardens, were kind of flat for years until COVID. Some certain communities, things like that, certain areas in South Florida may flatten out, but in most cases, we're going to see the market continue to go up. And this should show you that. So looking at this graph, we can see that closed sales in July 2022 were 360. The median sales price was 420. The average sales price was 430,000. Medium time to contract, 15 days. And then we had inventory in July move from in 2021, which we had 505 homes on the market. We have now 903 homes on the market. And our month's supply of inventory has moved in a year from 1.1 months to 2.2 months. But when we go down to July, you can see that the numbers are pretty much the same. So July of 2019, right? This is before the pandemic. Closed sales in Port St. Lucie were 379. So we actually had more closed sales in 2019 than we have now, but the average price was $240,000. So there's almost $200,000 in almost $200,000 in equity there. It's incredible, right? Average sales price is 256,000, right? Time on the market was 51 days to contract. Pending sales were about the same, 364 in July of 2022. This last month, pending sales 2019 July were 307. New listings were 497, which were just about 100 more new listings now. So that shows us that there's more houses on the market in Port St. Lucie right now.
Mm-hmm.
Inventory was 3.5 months though.
Right.
So when you look at these numbers, they're basically the same numbers, but there's just a tighter inventory than there was in 2019, which I think that tighter inventory is going to hold the market together, Brent.
Yeah, I think so too. And I think that days to contract that's a telling statistic, 51 days.
I mean, you're talking 15 days last month, 2019, 51 days was the average time on the market.
Right. That was before the whole pandemic started yet.
Right. And we were still here's the thing I want to say is we were in bidding wars in 2019.
Right.
I mean, bidding wars. If you were FHA and it was a house that had been redone and was in great shape and didn't need anything, there were 5, 6, 7 bidders on it. And if you were FHA, more than likely you weren't getting it.
Right.
So market conditions. So let's break it down by county for July and show these numbers. So Palm Beach County, let's start with that. So housing market conditions, you can see we're moving towards, if you look at the little graph right here, you can see we're moving towards a neutral market, which is a good thing. The median sale price in Palm Beach County was $404,000, a little over $404,000, right? And then you have, so since July of 2021, you're looking at $56,000 increase in equity. Last month in June, we had 10,133 homes on the market. We've increased by 0.3%. We have 10,159 homes on the market now in July. So I would say that August, when we see the August numbers, that's going to tick up next month. We're going to see more inventory on the market, obviously, because property just isn't moving right now as fast right now.
Right.
Then number of homes sold in June were 2,562. Look at the dip in July, 1,846 homes. That's down 27%. But if you look at this, 536 of those homes were sold over asking. So again, market's still moving upwards, right? And then average sale time, July was 31 days, 2021. July 2022 is 20 days, right? So we're so if we go back to that 51 days, right?
Right.
Where you can see, and Palm Beach County really wasn't. It was about the same. It was probably about 2 months, about average about a month and a half, 2 months for a home to sit on the market. But 48 of the homes were sold over 90 days. 1,453 of them were sold under 30 days, and 345 were sold over 90 days. So in 30 to 90 days. So we still have homes. The majority of these homes closing within 30 days. And then we look at Martin County. We've moved into a neutral market into Martin County. So number of homes in June were 680. Number of homes in July were 730, which is a 7.4% increase. Medium sale price, though, has still increased $57,000 from July of 2021. And then when we look at number of homes sold, so June we saw 179. Again, we're seeing that dip in July, down 39%. But again, 28 of those homes were sold over asking, 44 were sold under asking, 37 homes were sold at asking. So we're seeing price drops, right? But
Mhm.
as I've always said, many of these price drops are because the homes are overpriced. And then average sale time, we're at 19 days.
Going
So
fast.
we're moving faster than we were in 2021,
Mm-hmm.
right?
Yeah.
And then you can see that only one home was sold over 90 days. 19 were sold over within 30 to 90 days, and then 89 of the homes were sold under 30 days. So the market's still moving, even though it's balanced. And then St. Lucie County, still in a seller's market, further away from a neutral market than Palm Beach County. And we're seeing the median home price up $73,000 since 2021.
Wow.
So you're a happy camper if you bought a house last year.
Just a year ago.
A year ago in Port St. Lucie. And this is what I'm talking about. You can see the difference in the equity in Port St. Lucie than you can in Palm Beach County. And this is something I know, I tell my clients all the time, if you want to gain equity so that you can build equity in your home so that you can upgrade into a bigger home, maybe maybe you want to move back to Palm Beach County.
Right.
Port St. Lucie is a great place to do that. And if you're an investor, I mean, there's just this explains it.
The rent covers it too in
Right.
St. Lucie County, so we're doing those DSCR loans up there, and where the debt service is covered by the rents are really strong too. So that's a great way to leave an investment property, take your equity and move to, if you wanted to move back to Palm Beach County and have a rental property for retirement. So,
right.
wonderful.
And then you can see here, number of homes for sale has actually decreased in Port St. Lucie, 2,245 in June. We have July at 2,232. And then number of homes sold has decreased also. But again, 155 of those homes were sold over asking. 174 of them were sold under asking, and 122 were sold at asking. And then average sell time is exactly the same as it was last month. So that hasn't changed at all.
Right.
So 16 days is the average. So
we got to look, and when we're looking at statistics, it's always, you always have to ask yourself, compared to what? Like July 21 was, just the height of the
market, right?
You know what I mean? And so, we have sales are down, but it's still kind of normal. Actually, it's lower as normal. So
right.
It's not. Yeah.
But I think what these numbers show to a seller or a buyer is that, look, we're moving into more of a normalized market. We're seeing our listings sit on the market a little bit longer. We sold one in Delray in just a couple of days, but we sold it at asking price. I thought we'd sell it for more than that because the house was brand new where it sit. It's only 3 or 4 miles from the beach. But it sold for asking price. We had 2 offers on it out of 9 showings. Now we're looking at the farms. I have a house sitting out there. We've had a few showings on that home, no offers yet. Same thing going on in Port St. Lucie and Manderley. We have a listing in there. We've had 2. One's under contract. The other, we're still trying to sell. And that one, we've had a few showings on that one, but nothing like we were seeing just 3 months ago.
Right.
So we're definitely seeing a shift in the market. So I think what that means is for buyers is get out and buy a house right now. Because if even though rates are a little higher, there's more inventory on the market and there's room for negotiation.
Oh, yeah.
There hasn't been any room for negotiation. There's also room for an FHA loan and there's a room for a VA loan, which there's been no room for that either. You came with FHA or VA, you're not getting it. Matter of fact, I mean, in 2020, in the beginning of 2021, you could not even get a financing deal done because there was so much cash coming into the market at that time, Brent.
That's right. That's exactly right. Yeah, you'd get pushed out. And we were doing pre-approval letters, 10, 15 for each borrower, multiple offers before they'd find a home that they're, get an offer accepted. So, now lenders have responded to this market too. They're quick to respond typically to moves in it. So we're seeing, 2-1 buy downs, things like that, strategies to help, especially first-time home buyers get into a home where they can have a lower interest rate the first 2 years, and it fully gets to
Explain that. That's an adjustable rate mortgage, right?
You know what it is? It's not really an adjustable rate. It's just a temporary buy down. So in other words, with a seller concession, we can see that now. A typical situation would be about a $300,000-$400,000 loan, if you will, where the seller has seller concessions. In other words, asking for a seller credit towards closing costs, where they can still get their price, not upset their neighbors by selling their house for less, that type of thing. Because a lot of times people are concerned about that type of thing, right?
Right.
And so sometimes it's easier to give us a concession. And so, hey, we're going to help you out towards closing costs. Well, that can be used towards a buy down where the seller actually buys down your rate. Say you qualify for a 5.5% rate with the credit profile you have. The first year would be 3.5%. For the first 12 months. The second year would be 4.5%. You know exactly what the rate's going to be. And then the third year, it goes to the full rate of 5.5% if that's the rate you qualified for, and it's fixed for full 30 years. So it doesn't change, or it's 28 years, so the remaining term. So the seller is essentially getting you into the home, helping you qualify, helping you get that lower payment. And, a lot of people, they get raises every year. That's just a great way to get them into the home. And actually the seller gets their price still,
Right. Now there are adjustable rate mortgages coming back, right?
Yeah, absolutely.
Talk about that a little bit.
Yeah, there's a 5-year, a 7-year, and a 10 years is what's most typical right now. Those are pricing out very similar to the 30-year fixed, but we'll see days where that starts to look like it makes a little sense, and as the market starts to lean in the way it's going right now, we'll see where that yield curve will, start to come back into line, and where it might make sense to look at a 5-year or 7-year fix, especially, because the rates are lower. And so, typically. And so right now, it's kind of a pretty close to the same. There's a little bit of benefit to doing it, but if you're in that home, you're going to be moving in 5 years or 7 years. It's not a bad route to look at as an additional option.
Right.
So,
right.
Yeah, lenders respond to this stuff pretty quick.
Tampa area is killing me with prices. I guess
Yeah.
the prices are high in Tampa too. Well, they're higher everywhere.
Everywhere.
I'm looking for my son a home in Orlando, and prices are really high. With that being said, though, there's more inventory, there's more negotiating power out there for you right now.
Right.
So prices are not going to come down, especially in Tampa right now, because my son is right there in that market, and he's watching, that Tampa market grow, because they were actually looking at homes over there too. And a lot of people are moving to Tampa. A lot of businesses are moving to Tampa. So wherever you're seeing business go to, you're going to see prices continuing to rise. So
you always have to say compared to what,
right,
like
compared to what?
Yeah, because if you're coming from California, like I did, 12 years ago, everything was, I couldn't believe how inexpensive housing was, and no income tax here and all that.
Right.
It's just like, it blows your mind if you're coming from somewhere else. I mean, what do you mean it's not $800 to register my car every year? It's only, $59. It really is, it's shocking, the difference.
Right.
And so it's not like a little bit. So.
And when you talk about that, Brent, we're gonna show this screen right now, and I want everyone to understand. We sit here on this show, and we're not telling you this because we're in real estate and we want to sell you a home. We're telling you the truth. These are the facts. This is what's going on with the market right now. But Florida, if you live in Florida right now and you can afford to buy a home, you need to buy a home, because don't look at the rates unless you're buying investment real estate. What the house is going to do in the next 1 or 2 years, as far as equity goes, if it flattens out or it goes up a little bit, doesn't really matter. What matters is that you own a piece of property and you're able to actually buy one. Because here's the thing. People are like, oh, I'm going to hold out until rates go back down, which they will go back down. Right, Brent?
Yeah, I believe they will.
Okay.
Absolutely.
So rates go back down. We're still in the inventory crunch, right? Like we are right now. What happens to the market?
Yeah.
It slingshots back.
Right.
Well, if you own a house, you can refinance. If you don't own a house, you might be in the same position or somewhat of a position that you've been in the last 3 years or 2 years where you couldn't buy because you have so many people coming in with cash. Because what I'm about to show you, got everyone on this that's listening to this, if you're listening to us live right now or you're listening to it after we've done the show, you're going to understand what's happening in Florida and why it's happening. So this is, we were just here for a concert last night in Miami. I love Miami. I know there's people that may disagree that are listening to this, but I came from Houston and I love big cities. I used to love New York, just don't want to go there anymore. But Miami is an awesome city. And it's always been an awesome city to me, but back in the 80s and 90s, it was a pretty dangerous place to be, right? So this is Mayor Suarez. He just won his reelection with 80, I think somewhere around 86% of the vote, right? Now, Miami's this came out and I put all of this together. Miami's economy is on fire despite other major cities' financial slide. So Redfin put this out. This latest migration study ranks Miami as the #1 city everyone is moving to. Redfin's latest migration analysis that examines the housing trends across the U.S. As Redfin puts it, to people are leaving big, expensive cities in search of more affordable places to live. Now, we just had dinner at a little Cuban spot, right? Had a couple of drinks with my son. Went to see a concert, dinner and drinks were $200, right? And we had a little Cuban restaurant. I mean, Miami's not the cheapest place to go to. I mean, you can get hotels are $400 or $500 a night. It's just not least expensive. But this is what you were talking about, Brent, as compared to what, right?
Right.
So people moving to Miami think it's cheap. It's inexpensive to move, right? Remote workers from substantially greater salaries, right? So these are people that are making money from cities like where? San Francisco, Chicago, New York. #1 place people from New York are moving to is Miami, right? Because all the hedge funds, you have all of the crypto companies moving, funds moving down. You have the brokerages moving into Miami. It's absolutely amazing amount of money moving into Miami. So cities like San Francisco, Chicago, New York are finding themselves here overjoyed by Miami's lower cost of living.
Yeah.
It's the most expensive place to live in Florida.
Right. Clearly.
So,
I mean, people up here will say, what do you mean Miami's cheap? It's
right. So if you're moving from San Francisco or Seattle or Portland or Austin, Texas, or New York or New Jersey, like we've been moving people to Port St. Lucie, it's a bargain. And that's why it's growing so much. And even Palm Beach County compared to this is a bargain. I mean, Miami's expensive, no joke. Piece of land just went in Little Haiti for $3.5 million. There is no land to be bought in Miami. The hedge funds have bought it all up. They've put options on every single house they can. Coulter's trying to fill in a lake so they can build a community there. I don't know how that's going to work, but I don't think it's going to work, but we'll see if it happens. But that's what they're trying to get the city. But here's the thing about Suarez, right? So if you watch the market news, he's all over the market news right now because of what he's done in Miami. So according to the mayor, Miami saw a 12% increase in revenue year over year from January, which is the second most recorded in history. Taxes are a record low at 1.4% unemployment rate and the lowest tax rate in history. So your unemployment rate is 1.4% in Miami right now. And you have the lowest tax rate that in history in the city, but the city has over $145 million in surplus, the most it's ever had. The city is also preparing to end this year with the lowest homicide rate Miami's seen since 1930 when Al Capone was there, making it one of the biggest, safest cities in America. And here's what it is, Brent. Miami was voted the happiest city in America and the healthiest city just recently.
Wow.
The happiest and healthiest city in America.
If you would have told me this 30 years ago, I
would
say
never believe it.
I
If you
would never
told me
believe it.
20 years ago, I wouldn't believe it.
Right. It was, I don't know, for people that don't know, it was flat out dangerous. I mean, it was,
man.
it was horrible.
I mean, cocaine cowboys in the
Right.
80s and early 90s. I mean,
Yeah.
it was a dangerous place. I mean, just 15 years ago, you had to be careful where you went in Miami. I'm telling you, and it's an over exaggeration. You can eat off the streets.
It's crazy.
I mean, it's unbelievable. You can walk down the streets of Miami day or night and feel absolutely comfortable. There's police everywhere, presence everywhere. The city is just absolutely growing by leaps and bounds. And it's really all because of this guy right here.
Yeah,
Mayor Suarez.
The redevelopment's crazy. What's that area that was it Wynwood or something like
that?
Wynwood.
It's absolutely gorgeous,
and
right?
That used to be a slum. Yeah, it was horrible, dangerous. Yeah. I mean, the shops, they put incentives. If you put incentives in front of the people want to do well. They want to work hard. They want to, achieve the American dream. And if you give them the opportunity, it's amazing how industrious people can be, and they just need their, leg up. It's like it's wonderful what's going on there.
But I bring this up to say to the, all the YouTubers that are putting information out that the market's going to crash in Florida, that it's too expensive, that, we're I'm going to sit back and wait so I can get a foreclosure or I'm going to sit back and wait till rates come down, or I'm going to sit back and wait till the prices of homes come down. They're not coming down.
Yeah.
They might flatten out, but this is what's happening in Florida right now.
Yeah.
Florida, everyone is moving here because it's a bargain. Taxes are low and business is thriving.
Mm-hmm. Yeah.
I mean, retail here is still thriving, where it's just getting crushed everywhere else in the country.
Yeah. When people watch the general news, that type of thing, or they're looking at YouTube for real estate data, it's really specific. It's important to get very specific geographically what's going on. Even in Florida, the markets are different from county to county.
Absolutely.
From neighborhood to neighborhood,
Right. The West
really
Coast is different. The West Coast is different than the East Coast. The South Florida is way different than Northern Florida. You have a whole different, each city's different. Orlando, West Palm Beach, Jacksonville, Miami, Fort Lauderdale. I mean, wherever you are, the market is different. Like you said, even neighborhood to neighborhood is a different market.
Yeah.
Because I will tell you that the tradition market is totally different than the scattered lots in Port St. Lucie.
Yeah. Well, I was talking to an acquaintance of mine, like lunch about a month or so ago, and he was saying he lives in Venice Beach. He wanted me to meet this guy because he's from California. And so we hit it off, had a great conversation, but he was saying you can't walk on Venice Beach anymore. It's in California, near Los Angeles, without, hard-soled shoes because the needles on the beach. It's like, I just can't imagine that. He goes, I can't get Amazon delivered to the front door. I'm paying $3,000 for it. I think it was $3,500 a month he was paying for a studio. If you put something on the front porch, it's stolen within minutes. And so it's just you come here and it's like, I can take my $200,000 salary. I can work from home, and what? It's a shocker. I mean, a $200,000 to put dollars to it. I mean, just moving here, just state income tax, you're going to save $25,000 plus. You know what I mean? On just state income tax, plus all the other income tax or the taxes that are on gasoline. You're paying $6 a gallon for gas there. I mean, so it's just every time you turn around, it's something there. So it's just, when people compare apples to apples, it's like there's no comparison. They're going to want to move to Florida.
Right. So one of my friends, Yordando, just jumped on, said, Lee, I hope everything's well. Everything's great, man. We need to get you in a house. like we were trying to get him into Emory, and the prices were going up faster and the rates started going up, and it kind of just blew him out. And so I told him, hey, let's just wait until the market settles down. Yordando, the market has settled down, brother.
Right.
It's time to do something if you want. So it's a great time to people. So let's talk about that. So sellers right now, so because he would have to sell his home, right? So
Mhm.
let's show our screen again. So we went over this last week. We're going to go over it again. For sellers right now, the market is starting to normalize. And with a normalizing market, it's important how you price your home. Most people aren't underpricing their home right now. They're overpricing their home. So underpricing is really not the problem. Underpricing is the problem. I mean, overpricing is the problem. So market value. You need to make sure that your agent sits down with you and goes through the comps and you get to reality and price the home correctly. That's
Right.
really, really important right now to price your home correctly. If your home is not selling and you're priced at the market price, instead of lowering your price, which I don't think is doing anyone any good, do what the builders are doing. So put a concession on the home, like Brent said. So put a $5,000, $10,000, $15,000, whatever you feel comfortable with, concession on the home to help the buyer buying the home with the closing cost, or they can buy down their rate. Because this will do two things for you. Number one, lowering the price of the home $10,000 really isn't helping anyone if it's going to appraise. What's going to if your home is going to appraise, what's going to get you that buyer and what's going to make them want to do business with you over another property is the fact that, hey, I got a $10,000 credit here.
Yeah.
So the house has to appraise for them to get that credit. And if they can get that credit, then that's going to help them buy down the rate. And that's going to help you sell your home faster. So I really believe in that right now. And here's why. That's exactly what the builders are doing. So follow what the builders are doing. They're not lowering their prices. They're giving concessions right now. They're increasing concessions. So they're giving concessions on the lots. They're giving concessions on the homes. So you're getting anywhere right now between $7,000 to $30,000, depending on which community you're looking at. In concessions to close the home, so they can close out the communities that they're building. So concessions work much better right in this kind of market than a decrease in the price. Wouldn't you agree, Brent?
I agree 100%. Everyone talks about payment. That's really, hey, I can afford that payment. And I think everyone pretty much knows that rates are going to come down at some point in time with a recession looming. So that's a great strategy, I think.
And then buyers, this is why you should buy. We'll go through this again. There's fewer multiple offer scenarios right now. I mean, just a lot less offers on homes. I mean, so it allows you to get in and purchase a home at the market price instead of having to come out $20,000, $30,000 extra like you were, instead of having to fight all these cash offers and conventional offers with $200,000 or $300,000 down. If you're FHA or VA and you need to buy, this is the time to do it. There's fewer homes selling above asking price again, and the supply of homes are growing. So there's more homes out there to choose from. So we put a person in the car right now. We can go show them 3, 4, 5 homes.
Right.
There was no way to do that. A year ago, it's impossible. I mean, house hit the market. We had to go show the house right then. Yeah. Now we can actually go show people homes in different communities, different markets. So it's a way better time for buyers right now than it's ever been to get out there in the last 2 years, to get out there and purchase a home. And then when you look at this, rates, these are the average rates. So, even at 5% in the fives, we're still lower than we were in the 2000s.
Right.
And that's what people need to understand, Brent, that rates go up and down, but prices right now are going to continue to go up.
Yeah. So it's always compared to what, right? You know what I mean?
What?
Yeah. And so, it really, and the market's going to find a balance. And so that's just where things are right now. And I think, because we are, entering a recessionary period, I think, if we're not already in one, I think, rates could, improve over the next, 12 to 18 months. I think there's going to be an opportunity. I told people, in our industry, don't be discouraged by higher rates now. And we're setting up for another refi boom. You know what I mean? And so, and just, like the concessions and the buy downs and all that stuff, I think that's a great strategy, because that way you're letting the market work for you. You're catching the wave, right? You're letting the concession buy your rate down, and you're locking the price in,
Right.
So, yeah.
Well, there's opportunities in a up market, and there's opportunities in a down market.
Right.
And with the up market, yeah, everybody made a whole bunch of equity in their home. And that's the thing. When people talk about, hey, well, prices are going to come down. Well, the only way prices can come down is if the supply increases over demand. Yeah. We're a long ways away from that.
Yeah.
In most markets.
You've been beating the drum for 4 or 5 years now about Port St. Lucie, and you've been spot on every time.
If you bought in Port St. Lucie 4 or 5 years, you love me. All our clients in Port St. Lucie. I have hundreds of clients in Port St. Lucie, and
you've changed people's lives.
Oh, they're just. And most of these people would never be able to afford Port St. Lucie. They couldn't afford to buy a home in there now. We were literally during COVID. I was getting up every day, and when we had the lockdown, I was getting up every day and checking the market, and I was seeing that these new home builders were still selling homes. And then they were still selling homes. And then all of a sudden it's like people are selling homes on Zoom. Yeah. And we're doing Zoom meetings and selling homes. And I'm calling my clients up, and I'm like, hey, listen, the market's not going to drop. That was the big concern, right? We're going to roll back into 2008, but the government started pumping all that money into the market. They lowered rates. They went to zero rate. And so we had these, under 3% rates, and people just had the ability, and then they had all the cash from COVID, right? So they got all that COVID money, and then the market just went pow. Yep. But the thing that buyers and sellers need to understand about this market and where we are now is that the other thing is, if you have all of these people that bought over the last 2 years, they're sitting on $50,000, $60,000, $100,000 worth of equity in their house minimum. If they bought 5 years, 10 years ago, it's even bigger than that. So let's say they do lose their job. Let's say the recession causes people here in Florida to lose their jobs, right? Well, they have so much equity in their home. Some of them could refinance. They could take because they can go find some kind of job. There's jobs available everywhere. My daughter's working at Nordstrom's right now, making $13 an hour plus commission. So there's jobs available. So, you can go find something to do. And so you can get a loan. Plus, if you did go into where you can't make your mortgage anymore, well, you can sell your home. You're going to walk away with a whole bunch of money.
Right. I always tell people that are concerned about, going through a difficult time, and I don't want to go through foreclosure and all that. I said, well, if you don't make your mortgage payment, it's like the absolute worst case scenario, right? You can stay in that home typically to 4 to 7 months, and that's kind of the fastest you're going to get out. If you miss a month's rent.
Right, Brent. You could sell your home, your single family home right now in Port St. Lucie, right? And come to West Palm Beach and buy a townhome. Mm-hmm. Or you could sell your home and buy a townhome, or you could sell your home and buy a smaller home.
Right.
In pretty much every market right now, because you're going to walk away with so much cash. Right now, we have a seller that they have so much equity in their home right now that they can sell their home and go buy another home and be debt free completely.
Yeah. Lee, I spoke with someone this week actually. And she was thinking, she bought the home in 2005, and she goes, I just bought at the top of the market. What a stupid mistake, all that stuff. She paid $375, and the home's in the 600s now.
Right.
You know what I mean?
It's unbelievable.
Yeah.
And then the other thing is if you're renting, this is going to continue to go.
Yeah.
As long as rents are, as long as the market's tight with homes, we're going to see people needing to rent, and rents are going to continue to go up. Now, I will say that rents seem to be leveling out a little bit. I think they're starting to reach their peak where people just can't afford to go any higher. But if prices continue to go up, rents will go up with the prices because taxes will go up. And as taxes go up, rental property has to move with the tax rate.
Yeah, and 25% of investment properties were bought by hedge funds, big investors, institutional investors. So they're going to raise the maximum. It's an unemotional decision for them. The ones that I see, where they're paying below market rent, a lot of times it's family, friends, that type of family. That's what we see.
Right. I believe. Yep, we see that every day.
Yeah.
So I hope that we shed some light on the market for you. I think we shared a whole bunch of really great information tonight. Share this with your friends. Yeah. I think this is good information to share with your friends, your family. If they're looking to buy, if they're looking to sell, share this video with them. These are the facts. You can go and look up everything that we're talking about. You can find it on any market news. What we're talking about is happening nationwide, but like I said earlier in the video, Florida is a different market than the rest of the United States right now. Really Texas is a lot like it, but Florida it's a better market now than Texas is. Also, if you like this video, please like this video. It really helps the algorithm, lets us spread more information out to more people, and we really appreciate that. And then if you have not subscribed to my channel, please don't forget to slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. And remember that Brent and I are full-time real estate agent and a full-time mortgage broker. So if you're looking to buy or sell anywhere in the Treasure Coast or Palm Beach County, please reach out to our team. We'd love to help you find the perfect home for you. Be kind to each other, and we will see you next week.